All right, guys, tomorrow is a big day for us. The Consumer Price Index report is coming out tomorrow. And if we get the numbers that we're looking for, I think that we will be battling with a number and a ceiling overhead that we haven't battled with for over a year. It was November, the last time that we battled with a 200-day moving average on the mortgage-backed security. We're going to take a look at that in just a moment here. And we're going to take a look at the numbers that we're hoping for and expecting for our Consumer Price Index report that's going to come out tomorrow, because I want to make sure that you pay attention, that when you turn the news on tomorrow and it tells you the consumer price index number, you should already know whether that's a good thing for the markets or a bad thing for the markets. When we're talking about interest rate markets, I want to make sure that you begin to understand this more thoroughly. So let's take a look and see what is going on. So tomorrow's consumer price index report, what we want to do is we're going to be replacing the December of 2022 number. Okay, I'm sorry, it's December of 2021 number. So we are going to get the reading for the CPI for December of 2022, which is replacing the December of 2021, which was a 0.6. Now, 0.6 is a rather high reading, which is good news for us because it means that it's going to be easy for us to beat that number. Now, the markets in general are saying that they are anticipating the core CPI number to come in at 0.3. Now, if it comes in at 0.3, we'll take it. Okay, that's not a bad situation for us. But if you watch the report that I put out about my whole annual projection, you would know that I'm looking for these numbers to come in at 0.2. I want the consumer price index and the personal consumption expenditures to come in at 0.2. Now, if it comes in at 0.3, then later we get a 0.1 and then a 0.2 and a 0.1 and a 0.3, as long as we're averaging about 0.2, I think that we'll be on track to hit my projections, which, as you know, is that we will be in the fours with no points on a conforming conventional 30-year fixed mortgage by July 1st of this year. Okay, so that's the number that I'm putting my line in the sand. That is my projection. So let's go take another look at that chart. Again, November was 0.2, October was 0.3. If you think that inflation is subsiding, then you can, based on your experience in the world and with the economy, then you could also feel pretty confident that we're going to be at a 0.3 or a 0.2. If we go to a 0.2, let's take a look and see what the markets are going to hopefully do. Now, we are currently up 31 basis points, which means that in general, the mortgage-backed security market is anticipating a low report tomorrow because this is a good day for us. The 10-year Treasury is also having a great day, down 8. Now, the market, again, is not closed yet. We still have just over an hour before it is going to close. And sometimes before a big report comes out, we see the market do like it's doing right now. You see that? It tends to pull back because people take their chips off the table and just kind of wait to see what's going to happen there. And that's actually being reflected in today's interest rates as well, which we're going to show you in just a moment. But if we go to the chart real quick, we're going to get through this and we're going to get over to the interest rates. Here's where the chart is currently. This is most recently. This is when we got that employment reading the other day that showed that wage-based inflation was reducing. Not that it was gone, but that it was reducing. And the markets loved it. Clearly, they were hungry for good news. We broke through 1, 2, 3, 4 ceilings of resistance. Now we are using this 25-day moving average as a floor of support under us, which is good news as well. What we are hoping for is that the consumer price index is going to come out at a 0.2. If it comes out at a 0.2, I think we will break through this Fibonacci level, and then we will be battling with this blue line here, which is the 200-day moving average. Now, what is significant about the 200-day moving average? When is the last time that we were battling with the 200-day moving average? We haven't touched the 200-day moving average since November the 10th of 2021. That's how long it's been since we've battled with this average. So this is going to be great news if we start battling this and getting above it, because then it is going to allow the 200-day moving average to begin to turn. And that is what we want to see. So tomorrow's report is very important. Again, this is one of the big three numbers that I talked about in my projections: CPI, the consumer price index, PCE, which is the personal consumption expenditures, and the movements from the Federal Reserve to the federal funds rate, which again, we're going to be getting all of these numbers now within the next 15 days that we're going to get these reports. It's really going to tell us what's going to be happening here in the first half of 2023. So let's take a look and see where home loan interest rates are at this moment. So let's go over to the Brent Bruce Daily, which is our very well qualified 30-year fixed conventional home loan with 800 FICO scores, 25% down on a primary residence, single family residence. Okay. So we're sitting at 6.125% with a small credit, $662. Now, I'm not surprised by that. I think that the markets are really, they should be supporting more of a 6.0 or a 5.99. But again, the banks are hedging their bets. They're holding back just a little bit. I've told you that before. They'll hold back an eighth to a quarter of a percent ahead of a big report like this, just in case it doesn't go our way. They don't get burned a little bit by over or underpricing their business the day before the report. I think that is what we're seeing here with a 6.125. Let's open this up and see what's going on here. If you pay a point or just under a point, you're at 5.75. Guys, this is a 30-year fixed conventional home loan. Here's the parameters right here. Yes, it is a very well-qualified 30-year fixed conventional home loan. However, guys, we were talking about 7.25% a few months ago. I mean, maybe it was even 3 months ago, 4 months ago. We have had a tremendous improvement, and tomorrow's report is the next big report that we need to get to know which way we're going to go. And we're going to see if my projections are moving in the right direction. I still feel confident about that, but we will see tomorrow when the report comes out. I believe that the consumer price index report comes out at 8:30 a.m. Eastern time, I believe is when that one comes out. So you will probably hear from me early in the day. You know, sometimes I shoot out just a quick number in the middle of the day, and then I'll get my full report out at the end of the day. But that's what's going on. Let me know if you agree. Let me know what your projections are. Let me know if you think we're going to have a CPI number of 0.2 or 0.3 or what you think is going to happen. And I'll be happy to respond to that as well. We'll talk to you again tomorrow. Have a good one.